Tax collection and recovery are crucial processes that ensure the Malaysian government secures the revenue it needs to function. The Inland Revenue Board, also known as LHDN or IRB, is responsible for collecting taxes from individuals and businesses. This process is not just about gathering money, it's about making sure everyone pays their fair share so public services and infrastructure can be funded. Tax collection is enforced under the Income Tax Act 1967, particularly sections 103A to 103C. In this video, we'll explore how taxes are collected, what happens if you don't pay, and the responsibilities every taxpayer should know. Securing government revenue is essential for the country's development. Taxes fund everything from schools and hospitals to roads and public safety. Without effective tax collection, the government would struggle to provide these vital services. That's why the law gives LHDN strong powers to collect and recover taxes. By understanding how the system works, taxpayers can avoid unnecessary penalties and contribute to the nation's growth. Let's look at the main methods used to collect taxes in Malaysia. Self-assessment system is the cornerstone of Malaysia's tax collection. Under this method, taxpayers are responsible for calculating and paying their own taxes based on their declared income. This system applies to company, individuals, and partnerships alike. It encourages honesty and accuracy, as taxpayers must ensure their information is correct. The self-assessment system streamlines the process, making it more efficient for both the taxpayer and the tax authority. Next, let's see how payments are made directly to LHDN. Paying your taxes directly to LHDN is straightforward and convenient. There are several ways to make payments, including visiting bank counters, using online banking platforms, or utilizing the e-filing system known as MyTax. These options are designed to make the process as smooth as possible for taxpayers. Whether you prefer traditional methods or digital solutions, there's a payment channel that fits your needs. Now let's discuss another common method, tax deduction at source. Many employees, taxes are collected directly from their salaries through the monthly tax deduction PCB system. This method ensures that taxes are paid regularly and on time. It's also used for contractors and certain interest payments. By deducting tax at the source, the government reduces the risk of unpaid taxes and makes compliance easier for both employers and employees. But what if the tax amount is significant? That's where installment payments come in. Sometimes the total tax due can be quite large. In such cases, taxpayers may apply to pay in installments. This option requires approval from LHDN and is designed to ease the financial burden on taxpayers. By breaking the payment into manageable parts, it becomes easier to stay compliant and avoid penalties. Installment payments are especially helpful for businesses or individuals with fluctuating incomes. But what happens if taxes aren't paid on time? Let's move on to tax recovery. Tax recovery kicks in when a taxpayer fails to pay their taxes. The LHDN has specific powers, under sections 103A to 103C of the Income Tax Act and the Income Tax Recovery Rules 1968 to recover unpaid amounts. This process ensures that everyone meets their tax obligations and the government can continue to provide essential services. Recovery actions are designed to be fair but firm, giving taxpayers a chance to settle their dues before more serious steps are taken. First step in tax recovery is usually a notice of demand. LHDN issues a formal notice to the taxpayer, requiring payment within a specific period. This notice serves as an official reminder and gives the taxpayer a chance to settle their outstanding taxes before further action is taken. Responding promptly to such notices is crucial to avoid additional penalties or legal proceedings. If the taxpayer still doesn't pay, the next steps become more serious. Taxes remain unpaid after the notice of demand, penalties and interest may be imposed. These additional charges are meant to encourage timely payment and compensate for the delay. The longer the tax remains unpaid, the higher the penalties and interest can become. This makes it important for taxpayers to address any outstanding amounts as soon as possible. Next, let's look at how LHDN can recover taxes through garnishment or attachment. Taxes are still unpaid. LHDN has the authority to attach a taxpayer's bank accounts, wages, or even properties. This means that the tax authority can directly recover the owed amount from these sources. Garnishment and attachment are powerful tools that ensure the government can collect what is due. However, these actions are usually taken only after other recovery steps have failed. If attachment doesn't resolve the debt, the next step is the sale of seized asset. Garnishment or attachment does not cover the unpaid taxes. LHDN may proceed to sell seized assets. This could include property, vehicles, or other valuables owned by the taxpayer. The proceeds from the sale are used to settle the outstanding tax debt. This step is a last resort and is only taken when all other recovery methods have been exhausted. Legal action is the final measure if the debt still remains. All other recovery methods fail, LHDN can file a lawsuit in court to recover unpaid taxes. Legal action is a serious step that can result in court judgments and further enforcement actions. It's in the taxpayer's best interest to resolve any outstanding issues before matters reach this stage. The legal process can be lengthy and costly, so early compliance is always the better option. Now, let's explore special types of tax recovery action. A taxpayer is planning to leave Malaysia with unpaid taxes. The Director General can issue a certificate to the police or immigration authorities. This certificate contains details of the tax debt and requests that the individual be prevented from leaving the country until the debt is settled. This measure ensures that taxpayers cannot evade their obligations by simply leaving Malaysia. It's an effective way to secure government revenue and maintain fairness in the system. Businesses involved in transporting passengers or cargo by air or sea, unpaid taxes can lead to serious consequences. If tax liabilities remain unpaid for more than 3 months, the Director General may issue a certificate to customs authorities. This allows customs to refuse clearance for any ship or aircraft owned by the taxpayer. It's a strong enforcement tool that encourages timely payment and compliance among transport operators. Another method of tax recovery is through a formal lawsuit. The Director General can issue a statement of claim to the taxpayer, detailing the tax payable and any penalties. The taxpayer is given 1 month to settle the debt. If payment is not made, the government may proceed with legal action to recover the amount due. This process underscores the importance of addressing tax issues promptly to avoid legal complications. Every taxpayer has important responsibilities to fulfill. These include filing tax returns on time, paying taxes by the deadline, responding promptly to notices from LHDN, and maintaining proper records and supporting documents. Fulfilling these duties not only keeps you compliant with the law but also helps avoid unnecessary penalties and complications. Let's review some key points to remember about tax collection and recovery. LHDN has broad and effective powers to enforce tax collection and recovery. These powers are designed to ensure that everyone pays their fair share and that government revenue is protected. From issuing notices to taking legal action, LHDN's authority covers a wide range of enforcement tools. Understanding these powers can help taxpayers stay compliant and avoid unnecessary trouble. Complying with tax obligations early brings many benefits. It helps you avoid penalties, interest, and the stress of legal action. Early compliance also means you can focus on your business or personal goals without worrying about tax issues. By staying proactive, you contribute to the nation's development and maintain a good standing with the tax authorities. Let's look at the limited rights taxpayers have to dispute taxes. Taxpayers do have the right to dispute tax assessments, but these rights are limited and must be exercised within specific statutory timelines. If you believe there's an error in your tax assessment, it's important to act quickly and follow the proper procedures. Missing the deadline can mean losing your right to dispute, so staying informed and organized is key. Always keep records and consult with professionals if needed. Maintaining accurate records and supporting documents is essential for every taxpayer. Good record keeping not only helps you file accurate returns, but also provides evidence if your tax affairs are ever questioned. This habit can save you time, money, and stress in the long run. It's a simple step that makes a big difference in staying compliant and avoiding disputes with the tax authorities. Sum up, tax collection and recovery in Malaysia are structured processes designed to secure government revenue and ensure fairness. The LHDN uses a range of methods, from self-assessment and direct payments to legal action and asset seizure, to collect taxes and recover unpaid amounts. By understanding your responsibilities and the powers of the tax authority, you can stay compliant and avoid unnecessary penalties. Remember, early compliance and good record keeping are your best tools for a smooth tax experience.